We're going to bring up, you just heard about Paul Doany, the CEO of Turk Telecom. A classically trained engineer, but something that, needs to be reminded is a lot of what this is about creating value. And this man has done it throughout his career, whether organically growing companies where he was in a position of leadership, or creating value through engineering financial transactions that made the whole greater than the sum of the parts. And he exemplifies what we're looking at in this session, which is, CEOs that are also willing and able to accept the risk and take the plunge as angel investors. He's going to come up here and share some insights with us. So please welcome Paul Doany, the CEO of Turk Telecom. Paul, please. Let's hear it from him. You want a handheld?
Thank you. Actually, I would like to say a few things about this idea that Baybars came up with about the CEO entrepreneurship. That he mentioned this to me about 2 years ago, and then he invited me to come and speak last year. And what happened in the interim is that I was reappointed as a CEO, so it's kind of like confused the situation, because this was meant to be people who are no longer in an executive role, and therefore they had, first of all, more time. But I think what was interesting about this idea, which appealed to me, was coming from the fact that he indicated that these are people, of course, who have network, who obviously would have to have some money, as they are the highest paid person in the companies that they were working for. But I would like to appeal to a different aspect today when I'm talking about this, and look at the empathy side of this equation. In which sense? Now, what differentiates angel from venture, and if you go all the way to something called private equity, whatever that will end up meaning in the future, is that the angel side are more giving types, correct? Because obviously most people who are coming here into an angel environment, obviously they are doing this for some expected return, but there's a lot more giving than there is taking. And when you get into the venture, so let me call that these are the more likables. And when you get into the middle range, it's a bit more venture, larger money. And of course, here the carry part is a lot more incentivizing for the people who are helping entrepreneurs. And of course, then you get to the least or the lesser liked people, who are the private equity range, because they're dealing with bigger money. And then it becomes a lot more institutional types. And of course, it's much less giving, it's a lot more taking, because now, as soon as you put the money into something, you're comparing, you're straight away looking at exits, and so it's a very different dynamic. So we start from company making. So making companies, which is what angel investments are all about, may look the opposite of what a CEO is good at, because CEOs are not generally good at making things, because that's not their job. I mean, their job is to enter a company, deal with stakeholders, and deliver results with a management team. So generally speaking, companies are not building up much. They may establish a venture capital, for example, unit that will be run by somebody else other than a CEO, obviously. So a chief executive officer is generally an execution type person. Now, of course, we're assuming $100 million, so that would not be a small thing. So our idea basically is to bully these people and get the value out of them in some form. They don't have to be CEOs, they can also be executives or ex-executives. The issue is that if they can give us time, that would be helpful, and some money. Now, clearly, I'm also very interested in people who will be doing this while they are employed. That can create a certain element of conflict, but perhaps not necessarily so, because I believe that businesses today cannot continue doing what they were doing 5 years ago, or let alone 10 years ago. So this speed of change, which is impacting the transformation pressure on companies, probably can take us into existing CEOs as opposed to retiring CEOs. So we're going to try to bully these people into getting the value that they can provide to us. And the last caution that I'm always discussing with Baybars is that, of course, CEOs are bosses, and there are no bosses in angel investments. What happens, I've watched sometimes a CEO walking into, let me say, a gathering of investors looking at an opportunity and starts talking down to the entrepreneur, seeing it that way. And of course, that risk can happen. Now, coming back to Turkey, I have seen actually in Turkey specifically an amazing growth of private money, Turkish and foreign, coming into this market. And I've seen a lot of healthy startups, from angel types to perhaps experienced and more seasoned people with money, making companies even in their middle age, all the way up to largish private equity type deals. So this is a very vibrant market. It's a very large demographic in terms of younger people, which excited me personally to take these risks. So I have taken these risks in this particular market, and the success rates are rates that I would focus obviously in this particular market, but this is supposed to be a global effort. I will be focusing of course where I am here, since I'm now back being a CEO, and we will discuss more on the panel. But I have to say that what we spoke about a couple of years ago, I now see is more viable than, his idea is more viable than I had originally thought. I didn't think that many CEOs would be interested, and I'm seeing increasingly in this domestic market people saying, I'm willing to look at something 50 or 100,000, and you know what, $50 or $100,000 can go a long way actually with angel investments in this market, and CEOs in that regard would be very helpful in this particular market, and especially on the networking side, I'm sure in other markets as well. The other idea that I found very interesting is these structures that allow these early stage companies to somehow group under a single vehicle to be listed. I found that very, very interesting, and I think I'm going to spend more time on that one, though I'm a little skeptical how you can do that across multi-sectors, but I think that's also a very important area to build into something like a market price entity. I think at this point I will stop and I will hand over to my next friend. Thank you, buddy.
Thank you very much. Thank you very much, Paul.